Welcome back to another video. I've been looking closely at Palantir and I really like the stock anywhere under $20, especially considering the factors that I've been looking at. And so I've been adding a couple of shares of Palantir to my portfolio. And what you're looking at is Alex Karp, the CEO of Palantir, who maybe emerged from lockdown or the restrictions and hasn't had the chance to get a haircut yet. But anyway, still looking pretty fly. And as you can see here, Palantir stock has been beaten down by quite a bit, even over the past month, past 6 months. It's still up, but it reached $45 as its 52-week high. Right now, sitting under half of that. Okay, so right now sitting just at about $20 a share, which again represents a significant more than 50% decline in the share price. Okay, and again, I think it attracts a pretty interesting valuation. What I think the big factors that will determine its stock price in the future will be, of course, the board of directors and the CEO's success, but also Wall Street beginning to understand what this stock is. Okay, so right now, I don't think Wall Street fully comprehends Palantir as a data service and software company, and I don't really think it comprehends the business that they're doing and the kind of profound impact that Palantir can have on the world. Okay, which we'll look at as it's starting to do with its contracts, even like within COVID, etc. Okay, so right now, again, it's 37 billion market cap, and what's preventing me from totally loading the boat on Palantir is the valuation. Okay, so right now it has $36 billion in market cap, and it's only earning 1 billion in 2020. Okay, if you're looking at the quarter, last quarter for Q 2020, it earned 322 million in revenue. Okay, so the price to sales ratio is astronomical for this company. And if you're looking at some real numbers here, the forward price to earnings ratio is 93. Okay, so to me, that is pretty expensive for a Palantir stock, and most forward PEs are in like the 20s range for the S&P 500, which some could say is actually quite overvalued. So definitely, if you're investing in Palantir, what you want to look at is the long-term future of this company. And if you're looking at analysis, we can see here they're expected to grow revenue quite a bit in 2021. So this year they're expected to grow 34%, and next year 30%. So if they can continue this growth up, then maybe the current valuation at 90 forward PE ratio could be justified. Okay, and so next let's look at their business model. One, it's basically tracking and analyzing data and patterns in data. And so it has a lot of awards within the government. So, for example, it has awards with the National Institutes of Health for, of course, tracking RONI data all over. And so it's nice to know that the government trusts Palantir to know exactly how it wants to manage the COVID-19 response, for example. Even has contracts with the Canadian government, which is, of course, where I'm from. Proud Canadian here. I mean, of course, only the contract value was 1 million. But what I'm trying to say is when it gets awarded these contracts with big buyers, such as the government of Canada, the US government, National Institutes of Health, Federal Drug and Approval Administration, FDA, then smaller businesses will be more likely to sign up for Palantir's Gotham or the other services that they provide. And these are just some other contracts. So Denver's Palantir closes out 2020 with nearly 150 million in new government contracts. That's just from the government. Palantir won government contract, but one analyst isn't happy. Obviously, someone's not going to be happy. So 90 million 5-year contract for the Department of Energy Safety Analytics, right? And the list just keeps going on. Peter Thiel's Palantir wins role in 823 million government contract. Next thing I want to talk about, so of course, like the contracts just keep going on, and I think towards the future, more and more platforms will be using Palantir for data analytics purposes. Okay, the next thing I want to talk about is, of course, Cathie Wood. She has been buying, or her funds have been buying Palantir. So May 4th, just a couple of days ago, they bought a bunch of shares. So a lot of shares, which represented 0.15% of their holdings. They also bought shares again later that day, but less so, only 1,514 shares, 1,514 shares on May 4th. And I mean, since then, the stock price of Palantir since May 4th has gone down, as we can see here. So it was for like $22. Now it's like 12, down 12%. Okay. So she sees this as an attractive valuation right now. And if you're looking at all 57 ARK ETF holdings, we can see Palantir is actually the 19th biggest position. Of course, Tesla is their biggest position, and so I see this as that they really see something with their technology. And Cathie definitely tends to be forward looking when she's looking at stocks to buy. So I would definitely trust her. In the sense that she knows what she's doing and talking about when she invests in Palantir. Okay, again, I'm a bit more hesitant just because with the current market situation, it looks like stocks have good earnings and they tend to go down. Stocks have bad earnings and they absolutely get shattered. Okay, I mean, just look at Apple, for example, right? They announced like a blowout quarter, and their stock actually literally did nothing. Okay, their stock went down by a couple of percentage points, so that's what I mean is like the market situation that we're in right now is decently scary. And it seems like, there also hasn't been like the biggest sell-off of hedge fund managers in stocks like since 2008. Okay, so that's definitely concerning. And what I'm saying is a lot of big money that really moves these high market caps are pulling out of the markets. And what they say is if you're invested in the stock market, sell in May and go away. Generally because May tends to be the month where that does not perform well in the market as a whole overall. Okay, so a lot of these funds have been selling in March and April, and have not been buying back in. So I think that could be a reason why some of these stocks, even though they've had killer numbers, is one, it could be already priced in, and two, because a lot of managers in general are just selling in the market. So what position will I be adding more shares in? I mean, I've still slowly added more shares. I mean, I like it anywhere under $20. And I see that the RSI and MACD look decently attractive. I like that it's trading below its 50-day moving average at, again, $19 a share, whereas the 50-day moving average is at $23.40. And again, you're looking at the relative strength index, it's at 30. So indicating that it's oversold. And same with MACD, it's sort of diverging lower. So again, this shows maybe it'll hit $19, $18, $17. Again, you never know when the bottom is, but when stocks like these go on the uptrend, they move and they move fast. Okay, so if you're looking at Palantir, it started at $9 a share, $10 a share, and I mean within a couple of weeks, it just absolutely ballooned to $27. And then to $40, and now back down to $19. So these stocks move fast, okay? And there could be a turnaround in the late summer, I would guess, right? So now when everyone is selling out, when all the hedge fund managers are selling out, I would say now generally is a time when you want to invest. So thank you for watching the video. Please be sure to smash the thumbs up button if you enjoyed it, as always, and please subscribe if you enjoy the content. And there's a couple of links down below, for example, to my Wealthsimple if you would like to trade Palantir at zero commission, and also to my free Discord. Feel free to join that. We talk about everything related to stocks, as well as some buys and sells and some moves in the market. So take care, have a fantastic day. Love you all, and see you later.